looking at managing profit expectations for long US dollar positions. This one coming in because we might be getting a little US dollar comeback. We have a very popular trade among looking at client sentiment from IG Group at least, and in the wider financial world as well. With this dollar getting beat up so badly, long US dollar plays are popular.
People love the extremes.
Here looking at, the US dollar Swiss franc pair with 85% of IG Group clients long. This was snapped yesterday. And looking at the trading activity, in more recent times, majority sells, but this might speak to, more position traders in this market with historic extremes.
Well, yeah, a couple of things. Dollar Swiss franc is a rounding error off of decade lows.
Right.
And so when you get an extreme move like that, you're likely to get people trying to get on the other side of it. And so you have, 85% of the IG Group clients in this market long. Now, the trade activity thing, that's obviously more of like some shorter term metrics of, you see the last month has been 57% sells, which is nearly even. But yeah, the last day and the last hour, more than 70% sells. That's just because you've seen a little bit of a bounce in the last 24 to 48 hours of trading, but still overwhelmingly long and still at 80.50. I think the historic low is like 79 cents.
Right.
And this market has been as high as like 85, 86. It's been above 90 in the last year or two. I think
believe so, yeah.
Yeah. So interesting setup. But yeah, a lot of people, given the last couple of months of price action with dollar longs, starting to see a little bit of dollar upside. Where the hell do I take this thing off at? Exactly.
And what kind of time horizon are you working with too? What kind of profit targets are realistic? If you're not, intra-hourly scalping and aren't looking just to layer on to position trades near these extremes. What we did for this study is use the past 3 years of price data using daily high-low open-close data for our popular US dollar pairs. And this one had, not any sort of curated entry criteria, just entering long US dollar positions at the daily close price with a max time in trade of 10 days. So letting this run for at most 10 days and then calculating win rates based on symmetric take profit and stop loss levels based on pip distance. So, this study not necessarily closer to an exact environment you're looking for or an opportunity to trade, but just analyzing, if you have been long US dollar from more of a random, persistent backdrop, what kind of profit targets are you looking at?
And yeah, none of these studies are going to. The purpose of studies in trading like this is to give people some kind of idea of, you use the word expectations, or like guidelines for how markets have historically acted. If you think that from a study like this or what they do with the options or anything else, that it's like, okay, they're going to give me the magic numbers and then I'm just going to do that. I was talking to a guy at the Tasty Live event last week and he was like, so can you show me which strike to sell? And it's like, I don't know what that means technically. And he ended up, we had a good conversation, but I think his preliminary thought was like,
answer please.
Oh, like Tom Sosnoff or whoever, like they like to be selling options, whatever anybody's, opinion is or strategy. And he has like the magic numbers of like every time I just sell the 100 strike.
Like
and
a
it's
playbook,
just like, it's not how it works. And I was even like, like really, if you're looking at all these different strikes in the S&P, for example, they're all, SPY ETF, they're all $1 away. I was like selling this one versus selling this one versus selling this one, kind of a rounding error.
Yeah.
Like it's not that big of a deal. It could be if you held them to expiration. Anyways, getting off on a tangent there. For this stuff, it's the same thing where it's like you're not going to get any results that it's like, oh man, I'm going to sell Canadian dollar like every single day.
Right.
And like I'm always going to take 30 points out of it. And it's like, that's not what we're looking at. But what we are looking at here is like, what can I expect if I am getting long dollar in the last couple of months because it's been so beat up, and I have this long dollar position on from yesterday, from last week. When should I be getting out given what I want out of it, which of course you have to insert that into it, is like, am I trying to have this for a couple of days or a couple of weeks? Am I trying to make, on a one lot position, $100 or $500 or whatever? So you have to enter your opinions kind of into there. And what we're going to give you is like, okay, like you can't expect, a 100-point move in 2 days, or like you can expect a 10-point move in 4 hours. And that might actually be like a pretty successful way to look at it. So let's take a look at the numbers.
Nice. So here we've got win rates by profit target, and we used 20 to 100. If we're thinking about the time horizon, we went 1 to 10 days. If a daily, high to low range is around 40 to 60 pips in a lot of these markets, this will give you, a good cushion there. And what we saw is if you are looking for something as small as 20 points, it's there a lot of the time.
This is awesome.
And this also, I know a lot of numbers in front of you, but hopefully with the color coding can kind of point out to you where the kind of cutoff is around that 50% threshold. It's around, 40 to maybe even 50 pips, and which pairs, have perhaps a longer leash for expectations from a per pip distance, which corresponds directly to your profit in dollars.
A couple of things. So one, you have to caveat this with dollar has spanked a lot of these markets on average for the last several years. So you're not necessarily, like when you look at that dollar yen and you're like, oh man, I'm just going to long dollar yen all the time, hold that stuff for hundreds of points. Consider the historical context and the fact that the dollar has beaten up on the yen really, really well the last couple of years in particular. That's likely unsustainable for, years and years and years into the future. Anyways, what is really meaningful here is, and I'm super surprised, man, that you're seeing consistent above 50% success rates with being long dollar, looking for 20, 30, 40, even 50 points. It seems like in these pairs, once you start thinking like, oh, I want 60 points and above, or especially like I want 100 points out of this trade, not very realistic. Your success rate really starts to turn south from there. Now, of course, you can have a 40% success rate and make 100 points on all 40% of those. And on your 60% losers, try to only take 20 or 30 point losers. We'll do that study at a different time to see how sustainable that is. But yeah, if you're looking for symmetrical, like I'm looking to make or lose 50 points every time, you're able to still eke out more than 50% winners on that setup.
Yeah, and the last thing we want to touch is average days to hitting the profit target. And here, a lot of numbers as well, but we're just looking at, if you want to be in a trade less than 2 days, 40 pips is around what you could expect for hitting that profit target. And then if you are looking for those longer moves, it could take more than 5 days to hit. And this is just based on hitting that profit target. Going back to the last one, we also saw around 80 to 100. That's where that 10-day time kicker also starts to kick in. But here, this is just looking for trades that hit those profit targets. And so we're seeing a grouping of under 2 days and then spread out all the way to nearly 5.
Well, so yeah, you could bring up the takeaways for the people to read, but my takeaways here are really just like you can try to take 20, 30, 40, 50 points out of these pairs and still have that, 50% success rate, maybe hopefully, of course, north of that. But what's also interesting, and I think that we're starting to develop this trend in Forex trading research, is if you have a trade on that's around a scratch or a small loser, small winner, after like 3 days especially, it seems like it becomes pretty random
Right.
after that. So the two things in my mind to really be aware of.
Absolutely. And here, just the other takeaways for you that we just covered. USD JPY, perhaps the most exceptional performance of the past 3 years. If that could continue, who knows? But yeah, just those notes on time in trade and looking for those 20 to 30 pip winners, the most consistent over the past 3 years.